Hello, my fellow wealth hackers. Welcome to another episode of the Truth About Real Estate Investors Show. I'm just rolling my headphone cable with my chair. My name is Erwin Cito. This is the Truth About Real Estate Investing. And what you didn't know about Cherry is I've actually had a lot of people asking me about my relationship with Cherry as we work well together in building. We've built a couple successful businesses together, a real estate portfolio, a stock hacking portfolio, and our registered charity, the Hamilton Bash Brigade. On top of that, we have two happy and healthy young kids. One of the questions, actually, I've gotten this question a couple times. In general, they're asking, how do we get on the same page? We don't. To answer the question, we actually have to go back to who Cherry is. It starts with Cherry being just as driven as I am. She's also quite bright, for those who don't know. Cherry was on the honor roll at Waterloo University. She was ranked in the top 60 in Canada in the UFI exam, which is the exit exam for all accounting students. So she was the first honor rollee in the history of the firm that she worked at. She's different. Cherry is also ambitious, for anyone who couldn't tell. I'd argue some days she's more ambitious than I am in pushing me for even higher levels. It was her idea to register the charity so that we could level up in both our legitimacy in the market and increase our fundraising by being able to provide people charitable receipts, by being able to provide donors charitable receipts. It was my crazy idea to host the conference last year with Greg Cardone as the headliner, but it was actually Cherry who surprised me when she was on board from the beginning. We support one another, and we have regular, just like most of you have regular conversations with your partner. Cherry and I basically have regular mastermind meetings on business, investment, and of course our personal lives, both health and fitness and parenting. It's pretty cool. Very grateful to have Cherry in my life. We rarely say no to one another. For example, Cherry wanted to move our home closer to work in order to cut down on our commute so that we could spend more time with our kids. That moving comes with a bigger price tag on the house and bigger mortgage payments. Both those things go against my core values. I don't like having large mortgage payments on non-income generating assets. But like one of my mentors, two of my mentors said, if you think it's expensive now, just wait. So when Cherry and I actually saw the house, the crazy part was Cherry was ready to buy the house before we even saw it when it hit the market. It was me that said, okay, if we're going to buy it, we have to actually go see it. So it was me that pushed the issue that we had to go see the house. After viewing the house and then walking behind the home on the path behind the house in front of which is basically a little pond. It's technically a rain catchment for you real estate geeks like myself. Cherry reminded me while we were doing that walk that it was her dream to have a home with a view of water, and then something just snapped inside myself. All bets were off. I was there to now negotiate to win that offer. Losing was no longer an option. Kind of like when we had to buy our home when we were 7 months pregnant. For you parents out there, you know exactly what I'm talking about. I remember working with a real estate client from Toronto. So when we were buying houses in Hamilton, he told me the story how I don't know how many houses I think he said he lost on 4 multiple offers, and each time he paid a home inspector. So his lesson was, it's too hard, it's too expensive. So what he did, this is how ambitious he was. He actually took the training to become a home inspector so that he could inspect his own homes while trying to buy a house in that crazy frenzied market in Toronto. And this was like 7 years ago. So that kind of paid off. Anyways, his story was that the story he was sharing was how by just walking through a house in Toronto doing a viewing of a property for sale, how he could tell who was going to win the offer, who was going to win the house for sale, was whichever expecting mom had the largest tummy. As in, whoever was the most expecting was the one the most willing to pay the most money for the house. That's his feedback, folks. No hate this direction, please. That's his story. And back to our story. Cherry and I weren't even actively looking for a house because we were in the middle of switching over a bunch of our investment properties out of our personal names into a corporation, so that we no longer these properties no longer require our personal credit to qualify for these mortgages. We now, our corporation qualifies for these mortgages in order to be able to buy more properties with our personal credit. Crazy, eh? And we just closed today. I just signed papers for that today. Pretty cool. And for anyone who's heard the term mortgage virgin, that's basically what we're trying to become again. We're trying to clear mortgages off of our personal credit so that we can go and qualify for more mortgages and in turn buy our new house. That brings me to a learning lesson I'd like to share. Be cautious of who you accept investment advice from. A mortgage agent recently advised a real estate investor that we know that accountants just want to sell corporations to make money. And this investor filled me in and told Cherry and I. The flip side, however, is that some mortgage agents can only offer you a mortgage, can't offer you a mortgage when a corporation is buying it. Right? I'll just say that again. There's only a handful of banks and lenders that do lend on corporations, and many of them do not work with the broker channel. What's called the broker channel. So meaning mortgage professionals that do not work for that financial institution. All the rich people I know personally invest in real estate, and they stock hack in a corporation. So that's your truth about real estate investing lesson for the day. Folks, this is hardly advice. Here I'm just sharing my opinions and my observations of my rich friends. Speaking of rich friends, this week our guest is Rene Masse. His parents were school teachers. Rene went to school to become a teacher, and then he got a job as a teacher. Didn't last a week, and he became a full-time contractor and real estate investor. Last time I saw, when Rene was in to record the episode, I always said, like, you're a former teacher. He goes, no, I consider myself a contractor. Okay, he probably knows himself better than I do, so let's call him a contractor. His focus was when Rene was last on the podcast. Any folks who listened to that show, Rene's focus back then was largely student rentals. His focus at the beginning was largely student rentals because he was investing in student rentals in Kingston, Ontario, when he was while he was attending his university, and he did that afterwards. And now he's more focused on converting single-family homes into two-family homes. He'll explain the reasoning why in the show, and I think that's actually really helpful for beginner investors to understand the difference in different types of investing. Rene is also a successful graduate of Stock Hacker Academy, where he's achieved, he just recently surpassed $100,000 in returns this year. He's a rookie stock hacker, and that's amazing to be able to create a six-figure side hustle in your first year of training. For anyone interested in learning more about how to create a six-figure life skill, I will be hosting demos again in the new year. So go register at www.stockhackeracademy.ca/demo. Again, that's www.stockhackeracademy.ca/demo. It's the only stock options course that I'm involved with. I endorse no one else. For anyone who is on my email list already, you'll see the dates. For anyone who's not, well, that's just silly. All this information is in the show notes if you need to get them. I present to you Rene Masse. Hey, Rene. Let's see you busy these days.
You already threw me off.
Yeah. You're used to it. You're a teacher.
You see me as a teacher. Yeah.
I'm just teasing.
I'm doing really well. Yes. So I've got a few things going on. We've got some duplex conversions, working with some JV partners, and stock options, obviously.
Okay, that's a lot to unpack. Well, so how's Kingston doing?
Kingston's pretty good. It's right now. There's no lockdown in Kingston. There's still freedom going around, and prices in Kingston have skyrocketed.
What's causing the skyrocketing?
There's just not enough accommodations. And what's happening is also people from Toronto are leaving. They realize they don't necessarily need to be in Kingston or in Toronto anymore, and they're going to further neighborhoods. Mm-hmm. And now we've reached Kingston.
Wait. Okay. How long is the drive?
It's about 3 hours.
3
hours.
hours?
Kingston to Toronto's 3 hours.
That's a ways. What's a starter home cost in Kingston?
Good question. Starter home, right now, the average home is about $420.
Oh, that's not bad.
Yeah. So a lot of Torontonians are seeing the benefit of that. And so last year, it was about $380, and you can actually get stuff for like $320, $330, which is pretty good. So they'd walk in and go, I'll take 2 of those. Or they'd walk in and then overbid $80,000, which was very unusual for Kingston.
Yeah, that's a challenge. Well, that's, yeah.
Well, in a way, it's good if you're already in the game, but getting other deals can be challenging. We got, it's a question of you get lucky. You persist with it, you do find some good deals.
Interesting. Okay. So it's been a while since you've been on this podcast. Do you remember how long it's been?
Was it 3 years ago?
Seriously?
No, it was 2017.
Oh, gee, it's been a while.
Yeah.
Not much has changed since then, eh?
It seems like a whole different world.
So before we were recording, we were talking about like levels of success and whatnot. Yep. Like, can you give us an idea of like where you're at today? First of all, like 2017, so like nobody listened to the podcast then, and I think we have like 15 listeners now. So we had to introduce you to these 14 new listeners.
Yeah.
What's life now for Rene Masse? Is that the right way to say it?
Yeah, Masse. Yeah, Masse.
Masse?
Yeah, Masse.
It's not French?
Yeah, my background. So I'm born and raised in Toronto, but my parents, they met in Toronto, 2 Quebecers, and they raised a family. So to answer your question, I think everyone has to define what success is. If not, you're really at the beck and call of what you see in the news or in movies or on commercials. Mm-hmm. So what's success for me, what's success for you differs.
Yeah.
So, and when you're 21, what's success? I mean, when I started off, it was just having $1,000 in the bank.
Yeah.
That was freedom for me.
Right.
If I had 1,000, I had security. Now those numbers change.
1,000.
So you got to define success. And when you get to that threshold, well, then you push it further.
So what was the last threshold you pushed for?
Well, in real estate or stock options, I mean, there's a lot of domains, I guess. Mm-hmm. Health, there's
I see you can do push-ups like nothing.
Yeah, you've been seeing me on. Yeah. So keeping a good morning routine, that's also pushing the level at how far you want to go with that. Affirmations and gratitude and spreading it with other people. There's a milestone on that one. In particular, the stock options as well. I had a milestone with that. Mm-hmm. It was $4,000 a month. Now it's like $10,000. So it's pushing the limits and just seeing how far you can go with it.
Mm-hmm. Mm-hmm. So I jokingly call you the teacher because
I know
for the one person who did listen to that episode, Rene, you spent a lifetime. Well, probably felt like a lifetime at the time becoming a teacher.
It was a year. It was a fun year. But what do you see? What do you do with a French degree? You just become a teacher.
Yeah. So that wasn't just 1 year. Did you go to undergrad?
Yeah,
to get your French degree,
and then 1 year of teacher's college.
Okay, fine.
And then,
but you went through high school too.
Yeah, high school. That was a lot of fun. I was just following the crowd.
Right.
But I remember everyone wanted to find a job after university, or teacher's college, and I was like, I'm not too worried by it. I was just, and once I did find the job, I actually ran out of money. Found a job teaching French, and it wasn't suited for me.
Right. Yeah. But it was a real teacher job. Like you were
for 3 months. I was a substitute teacher for 3 months.
Okay.
Yeah.
And you
I quit. I was like, this is not for me. And I became a contractor.
5 years in university to become a contractor.
Exactly. But I was a hell of a good contractor.
How did this tie in?
I was the smartest, most educated contractor. Didn't matter. And different mindset as well. I think the mindset was the key.
Okay.
Because I'd meet people. I'd never worked alone. I'd always hire people that knew how to work. I didn't know how to work. I could sell. I can talk to people. That was the big difference. And I had a bigger vision. I can see the benefits of real estate. My father was in it in the 80s in Toronto. So I can see, went to private school because of real estate. So there was a lot of benefits from the start.
Oh, cool. I don't know. There's a lot to unpack here. So we were talking before we started recording about like how to quantify real estate. Because I agree with you. The most common question is how many doors, how many properties. But it's different, right? Like I'm pretty open about it. I own 10 properties. I have family members who own 6 condos. Like if anyone knows condos, they don't cash flow. It's totally different. There's nothing wrong with it. I'm just saying, like it's hard for people always try to have it in one question. Summarize you as an investor.
What I find strange is you just met somebody.
Yeah.
That's their first question. I'm like, that's not very tactful. And what's the advantage to that as well? They're not going to gain anything. It's like a pecking order. They want to figure out where you stand on their pecking order.
Yeah.
Are they above you, below you? And believe me, like comparing yourself to others for happiness.
Yeah.
Oh, that's horrible. Like that's really on a bad path on that one.
Okay, so what do you ask someone when you first meet them in our investor setting?
How you doing?
Okay,
how you doing? I like small talk. I'm an extrovert, so and then I can find out what they. I don't ask them what they do, but I just let it flow. I let it flow.
Right. So you take your time.
I take my time with it and see how it goes.
Granted, it's not always easy to take time. Because, like we've gone to the same networking meetings, like Quentin's Durham REI, and like break is 15 minutes. And then,
Well, with any investor that's worked with me, there's at least 9 contacts prior to saying, yeah, I'm ready for this.
Mm-hmm.
So you got to just take your time with it. And basically it's, how it is. There's like 7 levels of intimacy, 7 levels of getting a conversation going. The cliche, how are you doing? Then you talk about the weather, then you talk about their opinions. And once you can accept the person as they are and common ground, yes, I agree with what you're saying. I like your opinion. Then you get into things like, okay, what are you looking for? Like what brings you here? What would you like to accomplish next year? Or what are your goals, dreams or something? If you can get to that, then you can get to kind of the obstacles.
Yeah.
And then from the obstacles, then you get to the need. And if you can fulfill that need for them and be the one to help them reach their dreams and their goals, then you got a friend for life, an investor for life.
Yeah. So, hopefully I have a friend in life in you. Because I totally agree. It's, everything we've ever offered has always been to fill a gap that I've already had in my life. I remember having a day job and then opening my pay stub and like, there's nothing left. And then that's why I got into real estate, is to fill a gap for myself. And then same thing with stock hacking. It's like, there's not enough cash flow in the way I real estate invest because I leverage right up.
Yeah, for sure.
And then things happen. Like, the property I just sold, it cost us $10,000 to get it ready for sale.
Yeah.
Right. How much cash flow do you need to get to 10,000? Right. So we were draining the account in order to do it.
I tell everybody, if you're getting into real estate, you need to be comfortable with debt.
Yeah.
It's you pile in a lot of debt. Like we bought a building last year and we already have a second mortgage on it this year. I mean, it's to the tilt. And then we're using those funds to buy something else. So you got to be comfortable with that. If you're not, I got a buddy who's an electrician. He's got all the elements to buy real estate, but he doesn't believe in it. He lost money in the stock market.
Who hasn't?
Yeah. And, but he doesn't want to do it. He goes, no, I'm not comfortable with that. I'm like, I get it. You're not comfortable with that. Real estate is not the game to play.
Yeah. Will they lend you money though? Did your electrician friend lend you private money?
I haven't really asked him. No. I haven't really asked him. Eventually, I mean,
I'm sure he'd love to make 6% on his money.
there's a wide range. It's not like there's so many people with RSPs. There's tons of people with RSPs.
Yeah.
So I'm not too concerned with that.
Awesome. You mentioned you purchased a building. Can you tell us a bit about it?
Yeah, I was with a JV partner back in July. I know you.
This past July.
Yeah, this past July. If you like the numbers, it's 305.
Single family home you can duplex?
Yeah, single family home, duplex. And the renovations are going to be, I don't know, we're completing this month. So by the end of the year, we'll be done. And I think it'll be worth $500.
How much did you renovate?
We had budgeted 85. I think we'll go under that for sure.
So hang on, sorry. You bought for
305. It was a wholesale deal. And renovations, they're going to be less than 85, about 80,000. And then I think we're going to, after repair value, will be in the 450 to 500.
Fantastic.
Yeah.
And the range is reasonable because this market's nuts.
It is. And I think we got lucky. I mean, back in July, I didn't realize it was that good of a deal.
So between market and the forced appreciation, that's like on the low side, $75,000.
Yeah, easily. Yeah, it's a good deal. And I think from the looks of it, my JV partner, he'll He'll have maybe 40,000 to the deal, maybe 45 after refinancing.
Wow.
Yeah.
So what kind of JV was this? So you still do like the traditional. What's traditional JV? So this was your partner put in the down payment.
That's right.
The renovation money?
Yep.
Oh, nice.
Yeah.
For 50% equity?
That's right. Yeah. And he was very happy to do so because he had bought a place in Peterborough, and I think the contractor just finished. He dragged it on, and it was double the amount. I think he spent. I mean, he got everything new, but he spent like 150, 160. And dealing with contractors, I mean, my background is in education, as you mentioned, and contracting. So I understand the contracting language. Just having the right team in play just makes a huge difference. Yeah. And having guys that can actually do the work, you pay them by the hour, you save tons of money. So he spent 150,000. We're going to spend half of that on pretty much the same renovations. And then there's also some property I bought in August. We're going to spend maybe 25 on the duplex conversion. It's a one bedroom downstairs, but it doesn't have to be. Most people think of duplex conversions where you're putting in 70 to 80 to 100,000 to duplex a building. But this building was already, upstairs was fine. Nothing. All we need to do was just put the tenant in, give them the key. That was it. It was clean. We didn't do anything. Downstairs, the previous owner had put a bathroom in there. All we needed to do was just drywall, kind of put a washer dryer, put an egress window in, have access to the hot water tank. So we'll spend about 25, I'd say, on this one. And we'll be done in a month. And it's already rented for January.
Wow. That's like really fast. Is the city very cooperative? Is that what helps?
Yeah. They have. The last year, there was a bit of a blip because there was so much going on. Last July 2019, that's when they opened up duplex conversions in Kingston legitimately. I mean, they changed all the rules and they just opened up a slew of individuals. Now the issue in Kingston is no one's selling these duplex conversions. So getting it appraised at a certain price can be challenging. So you need to really provide a package. It says, this is what we've done. Everything. You can't see this, but this is exactly what we've done. Provide them the great pictures. Give them the comparables. You do all the work for them and you say, this is what we're looking for. And depending on the appraiser, you can get that price.
Yeah, depending on the appraiser.
Depending on the appraiser. If you're not happy with that appraiser, get another one.
Yeah. And so in my experience, if we don't get the appraisal we want, we usually have to switch the lender. It's not pretty, but versus going through like an appeal process.
Yeah,
it's not.
So the mistake I did recently is I got it appraised at the price I wanted, and we tacked in the second mortgage, no problem, to buy another property. However, I didn't take into account the insurance. The insurance has a completely different evaluation. So it was going above 80% loan to value in their eyes. So it was at least 2-3 days of finding another insurance company to insure this, the second mortgage, this whole building. So you're constantly learning new things. I just didn't realize the insurance wouldn't be too happy with. I thought everything was set,
Interesting.
The appraisal was done, 80% loan to value, but the insurance didn't see it that way.
Okay. Do you want to shout out your insurance company?
MLS's brokerage. They're in Alexandria, Ontario.
I don't even know what that is.
Yeah, it's like you ever do casing trim baseboard? It comes from Alexandria, Ontario.
Okay.
It ships. They make it there, and it ships all Eastern North America. It's a massive warehouse. The whole village is manufacturing of trim and baseboard and casings. It's just.
Did you buy some property there?
No.
Too far?
No
idea where this place is.
This is like near Ottawa.
Oh, okay.
Yeah.
Not far for you. It's up there.
That's out there. It's in the East End.
It's in the East End. Ottawa's in the East End.
I should say Kingston. I'm from Toronto, but when I discovered Kingston, I figured I'd stay. But Toronto to Kingston, no, I should say Kingston to Toronto, it's only 2 hours and a half, maybe 3. Toronto to Kingston, it's like 5-6 hours. Torontonians, they feel it's so far.
Yeah.
So they never go.
Yeah.
Rarely go.
Well, back to this property, this duplex that you did. Can you share the rents?
Sure. Yeah. Upstairs, $1,750 plus utilities.
Good Lord.
That's fantastic.
And downstairs, I think we're going to get 1625 plus utilities.
Excuse me? Wow.
Yeah.
How come there's a little disparity between the up and the down?
Downstairs is brand new. Everything's new.
Oh, wow. Wow.
And it's as spacious as upstairs. It's a raised bungalow. We put a window in, an ingress window.
Mm-hmm.
So it looks really good. It's 3 bedrooms.
Wow.
Massive 1 bedroom.
Mm-hmm.
One bedroom is like a big master bedroom. And so yeah, so I think we're going to get the 1600s easily.
Amazing. Now, when we last talked, I knew you were heavily into student rental.
Yep.
Did you pivot, or you still do, or you're past that?
I've kept them.
Yeah.
But the numbers don't make sense anymore.
Oh.
Duplex conversions make sense because at the end, you've raised so much value into the building, and then you refinance and you leave as little as money in.
Mm-hmm.
While with student rentals, you need to put a lot of money in, and then you keep it there, and then the money's stuck in there.
Mm-hmm. Mm-hmm. Yeah, I can't refi.
So here's the thing: is I got out of. I mean, I had multiple, so I still have multiple sources of income, but the student rental allowed me to shift just to get a lot of monthly cash flow. Mm-hmm. That's the beauty of student rentals. Is the cash flow is like a cow. It's just unbelievable.
Can you share how much cash flow a month, roughly?
Easily 1,000. Like there's one place that's like 1,600.
Right.
Another place 1,200.
Right.
So you add a few 1,200, 1,600, 1,000 there.
Right.
It makes a difference. It definitely makes a difference, and it can pay for all your accommodations. And that's how it allowed me to free up my time and then focus on other things.
Right. Now here's a curveball. Because I do this all the time.
Yeah.
I compare my stock hacking cash flow to my real estate cash flow. How's that match up?
It's been a game changer.
Is your stock hacking close or surpassing your real estate?
Stock options has been a game changer. Just completely. So I told myself last year, I said, my goal is to work from anywhere I want. And I figured, okay, I'm going to bump up the coaching, or I'll buy another business, or I'll have more properties to do so. In fact, it was stock options. Just doing the stock options, learning that, understanding it, and putting a substantial amount of money in there, game changer so quickly.
Right. So in my experience, like my bankroll isn't that big compared to how much I put into real estate, but it's not even close.
That's true.
I think I bankrolled my stock hacking less than 2 properties, but my cash flow is greater than my entire portfolio.
Yeah, definitely. So all I did is I got a second mortgage on a property. Yeah, I got a second mortgage on a property, and sure, it cost me 10%, or actually 11%. But I was confident that stock options would work. Even at 2%, I said that 24% that pays for itself. So 11%, whatever, I'll take 11%. And I've made over 100,000 this year.
I was sharing before we were recording how I've been accused of just trying to get people's money and talking about this stuff.
Yeah.
There's literally reviews on my iTunes saying I only care about making money, other people's money.
So comes down to it is that there's always negativity.
Yeah.
There's people that are not going to believe. And that's the game changer. If people can just overlook that. But if someone's negative, they're going to see negativity in everything. My father had a joke. It said, so it's a mother who's driving, and the 5-year-old son is at the back. And the son asks, where are all the jerks on the road? And the mother says, it's only when your father's driving. So you see what I'm saying? You see what you want to see. If you want to see the thieves, you see all the thieves.
Yeah.
If you want to see abundance and joy, there's plenty of it. If you want to see scarcity, so you see what you want to see. You attract what you want, what you attract. So
it's funny because when I started investing in real estate, it seemed to be such a polarizing subject between financial markets and real estate.
Yeah.
I don't like, why does it always be like,
that's a good question, because,
and I think actually society's even gotten worse on being so polarized. Like do or do not. Like you're either with me or against me. Like no. Like you can do it all.
Yeah, for sure. I think people should do both. Definitely. There's. I think diversify the portfolio, have multiple sources of income. That's where the secret is. That's where it lies. To come down to your question, I think it's most people when they think of stock market, they're thinking of mutual funds. They're thinking of saving, putting money on the side, and everything. But there's so many ways of going about it. And once you know the right strategy that's safe and the returns are there, just do it over again and again and again. It's very liquid. So there's a negative connotation because you're getting 4 or 5% on your mutual fund every year. My aunt, for example, I mean, I bring her up, but she's approaching 65 and she's got like her RSPs, they're not where they should be. And now she's looking to retire and she's looking at it going, wow, I did exactly what I was told to do. Save, pray, put the money in every year. And after 25 years, there's not much to retire on. And she's worried about that. The house is not paid for. It's not a good position to be in.
Sorry, this is your aunt, did you say?
Yeah, my aunt.
And then how are you helping her out?
Oh,
you just gave her money, right?
No. So I'll probably, she'll probably lend her RSPs to me, and at a good amount,
right?
A good interest rate, and then I'll make double on it.
It's actually been a theme that's been coming up more and more on the show. Is a lot of investors who get you mentioned your last deal was a equity joint venture, but you are borrowing as well private money. It just seems to be, I don't know why, but it wasn't really talked about that much. That's like 2 years ago.
Private money, the thing is, the course of private money is pretty straightforward. It's a day course. There's not much money to be made in the educational system. But JV partner, it's a long process. I've been at this for like 15 years.
Right.
So 10 years ago, I met a retired mortgage broker who saw what I was doing as a contractor. He saw the potential of it. It didn't work out that well. It wasn't as smooth. In fact, I should bring it back a bit. I had bought a property 10 years ago and everything was lined up. We were doing the renovation. My guys were there. We ordered the windows. We ordered the kitchen. My electrician friend was going to be there. We had the panel to be switched over. And then 2 weeks in, the mortgage broker calls me and he says, lender's out. You lost the financing. I'm like, what? Like, I've already ordered the windows, the kitchen. Like, I'm screwed here. And it was not a pleasant time. And then a couple of days later, he goes, listen, Mac, I know someone who can help you out. My boss lends money out. And I'm like, okay, I'm listening. Like, I've got no choice here. I'm like stuck against the wall.
Yeah.
I'm like, how much? What's the interest rate? He goes, 12%, 1% a month. I'm like, oh man, I felt that was horrible. I felt that was like a failure. But then a buddy of mine who's a realtor says, oh, no, this is good.
That's pretty good.
Now you're in the realm of getting private funds. This guy gave you confidence. He's confident in you that you can get the deal done. So with this guy, I've done maybe 5-6 deals with him. So he's happy.
Right.
I think in a way he's kind of living vicariously through me. Kind of, oh yes, it's exciting. He sees excitement with it. He's somewhere retired. And we go, sometimes I show him a property. Sometimes we don't even get the deal, but he's still there to see the property and he likes it. He goes, yeah, let's do it. And I'm like, well, there's like 10 offers. We'll see if we get it. So yeah, tapping into some private funds, regardless if it's a mortgage broker or friends or family, I think it's very beneficial because you can get a good deal, buy out the whole thing, or at least they put 80% loan to value. You put another 20 in. You can still rack up several properties with that.
What year was this that you did this 12% deal?
It was actually 2011, I think.
Okay. So okay, good. Because I think that's just part of it is that you just need to be exposed to it early. Like everyone I know was like, what, 12%? Oh my Lord. I'll give up half the deal instead.
Yeah. So a lot of people, they think of the cost. They're not thinking of the gain.
Yeah.
And now that looking back, it's peanuts.
Yeah.
Like it was a good deal.
Yeah.
I bought it, a smashing deal. It was like the place it was vintage. You walked in, it was vintage 1964. And it's now worth double easily.
Yeah. So imagine if you give a half the deal instead. You could have saved the interest rate.
Exactly.
Save the 12% interest.
I mean, it's
give
up
not 50% of the deal.
Yeah. With private money, in the end, you need to sell a few. With JV, you can scale it up so that you can acquire 50, 60, but then you need a lot more intricate systems in place and a bigger team. It all depends on what you want to do. I mean, if that's people's success, you got to really define the success that you want.
Right.
Yeah. And the freedom as well, because freedom is one of those words. When I started off, freedom was doing what I wanted, when I wanted, anytime I wanted. I got into more trouble, more misery than ever because I was like at the beck and call of my body.
Right.
Now I find freedom involves more peace of mind, more time with family, kids. There's different elements of freedom, and just peace of mind is so key. Having that peace of mind is makes a huge difference.
How much of these things do you think you have? Can't even name them. All these freedoms, basically. Like you mentioned like being able to work from anywhere.
Yep.
Like, I call it freedom of location.
That's right.
You know, just name almost everything, starting with freedom or, I don't know, security, independence, all these words, all these keywords in marketing. But yeah, how's your family? How's your health? Okay, hang on. Today is November 27th. We're still in the middle of a pandemic.
Exciting.
We're sitting in a red zone right now.
I love it.
We're in danger.
I don't want to be anywhere else but here. I've chosen to be here today. I'm like, exciting.
No, I'm fortunate to be here. Isn't this weird? It is.
There's
all this
strange.
Misery outside of like our community.
Yeah.
And hopefully the 16 listeners that we have listening. Because for the investor, we've done really well in 2020.
It's an amazing year, phenomenal year. And I've got to be careful what I say around others because they don't understand. They see all the negativity of it.
Yeah.
They see the misery, or they're hooked on the news and they're worried. And believe me, I've tried worrying. It's not very profitable. Just go ahead and do things and hope for the best. Work at it. It's much more profitable than worrying about something, or even being concerned about things that we have no control over. Who gets elected in the States? I have no control over that. And I really, doesn't really matter on the market. So focus on things that you can control. Your health, your habits, what you're reading, what you're telling yourself, who you're hanging around with. There's a lot people can control over. But if you're regimented in a system of 9 to 5, where your boss tells you what to do at all times, and then all of a sudden you're cut off from that, then you're not used to the freedom. And then you get into eating more. You get into bad habits. You're not going to the gym anymore. So it makes a difference.
So I'll just add to that money. Because I think a lot of stresses stem from money. Because I believe I've seen surveys where the number one reason why couples fight, usually married couples fight, is usually money. Yeah. So again, like, we don't have that issue.
We have our issues. Yeah, there's other
we have lots of mortgages.
Yeah, exactly. So I told somebody that money's like an energy. One needs to believe that money is simply an idea backed by confidence. Money is a source of energy. Money is it's a tool to get what you're looking for. If you see it as scarce, it will be scarce. If you see it as abundant, well, it's everywhere. So money is one of those odd things. It seems to rule people's lives, but it can do a lot of damage. But if you change the mindset of what money is, it can really change all of it, everything.
That's actually a really good message. I think a lot of people get stuck on it. They think whatever they were taught, they thought money was evil.
Oh yeah, there's that as well. I remember my mother in particular, great woman, she's great, but anyone who had money, they weren't Catholic enough. They weren't good Christians. They weren't pleasant. It was just ludicrous. I didn't quite understand it. I got out of that mentality, but I remember growing up, certain things she would say was a bit strange, where it's like, oh, they're rich, as if it was a bad thing. And it shouldn't be the case. But if you look at a lot of the movies, what society portrays, in The Simpsons, Mr. Burns, he's the bad guy in a way, So it's a roadblock of how we see a source of money, which is really, if you think about it, I was telling this to my intern. So I was saying, money is simply the shadow of value. You provide value, the money's there. So most people, they follow the shadow, but they lose sight of value. Provide value, give yourself value, raise your own value, or give value to society. The energy of money will be there.
To me, that's the underlying of real estate. People like invest in real estate. Well, it's actually a bit of a business.
It is.
And it's kind of like two businesses. There is the rental part of it, and there's the resale part of it. The rental part is that you rent to tenants, and there seems to be more tenants all the time, even with student rentals. All the schools are growing in population.
Yes.
Right. The two schools I invest near, one's Brock University, the other one's McMaster University. Brock just bought a building, a residence building, to house more students. Mm-hmm. So the population is going to grow.
Queens tore down a couple buildings near the university to build a massive residence. Right. They keep
not
on
more
building.
Classrooms, more residents.
Yes. Yeah. They want I think 30,000 students in 10 years or so.
An increase of how many?
Right now they're at 24,000.
They want to grow by a quarter.
It's up to 24, 25,000. And yeah, I mean, in a way, Queen's is a very good university, but it's often related or compared to Western in London, which is what's the population of students? It's far exceeds.
I'm a little bit old.
I don't know, but it's probably in the 40,000 easily, or maybe 60. I'm not too sure.
When I went, I think it was 30,000 full-time students.
Okay.
But those are our customers. So we have customers for our rentals. This is business.
Yeah.
From a resale perspective, there's a whole bunch more immigrants coming.
Big time. And like you mentioned that, because 3 years ago, India arrived to Kingston. So in the past, what happened in the past was people would come to Toronto and then go out in the outskirts, Oakville, Kingston, Peterborough. Yeah. Now they're going directly to Kingston or the smaller towns because they've got a cousin there, they've got an uncle or an aunt, they've got family there already. So it's interesting. And the universities and colleges realize the huge benefits of having international students. They pay
way more
twice,
money,
but triple the amount. Yeah. So I've got a buddy who teaches at St. Lawrence College, and his whole classroom, they're from India. And all the students that we accommodated from either the college or the university, I remember these two little girls arrived January 1st. They were crying. It was so cold.
No one told them?
It was it was their first trip to Canada. And I'm like, these people, they're not staying. And then come summer months, they're like, yeah, we're emigrating to Canada. Yeah. And that's the whole goal. That's how they get in through the education system.
It's actually funny because I've talked about this with many people. I don't even know if those numbers are captured for the visa student to become a Canadian. I don't know if that's counted in the immigration number.
It's not counted in the 250,000 that come every
I
year?
don't think so.
Really?
Because the immigration number is Immigration Canada. Like student visa, that's something separate, right? But that's another thing. So
all I know is that most people don't realize that what we're living in Southern Ontario is unique. It stems. A huge pillar of it is the immigration. Without the immigration, our economy would not be the same.
Oh yeah, and without the immigration, we wouldn't have the real estate market.
Exactly. Yeah.
As in all these new condos going up, for example.
Precisely.
They employ many people. Right? What do we manufacture the most of in Ontario? I would say condos. We probably manufacture that more than anything, and that's all stems from immigration. So again, like the business of real estate, we have more customers coming to buy our properties, more customers coming to rent our properties.
It's just a smart way to diversify your portfolio. I mean, sure, keep your mutual funds or invest in other things, but yes, definitely invest in real estate. Should be definitely. It's a no-brainer.
Now, we were talking over lunch about the how most of the people we know that do stock hacking are actually real estate investors, because that's how they funded their accounts. It's probably how they afforded the course as well.
Yeah,
because it's not free. And then we were talking about what the first investment for people should be. I don't even know what the right answer is. I think you still need both.
So I would suggest the thing with real estate is that the funds are there to buy, and few people are going to lend you money to play in the stock options. I mean, that's unheard of. So
what do you tell like Matt, your intern?
Yeah.
Like, what do you tell him? Like, Matt, how old are you?
8.
Okay,
yeah.
28. You have a trust fund, right? Do you have much in the bank?
No.
Okay, so what's his first step?
So I
asked because I have listeners of Matt's age, about 2 of them.
So I would say first, if you've got a bit of money, understand stock options for sure. Do stock options so you can actually get those returns 4% per month. It's possible, definitely possible. But on the other side, also try to get real estate. But the idea of saving up money for real estate archaic idea. It'll take forever. So basically, it's double loan. Get a loan for the down payment, loan for the renovations, and then depending on the market, you could always live in it and then duplex it or cut it up and then live with tenants for a while.
Mm-hmm.
There's so many ways of going about it, but definitely choose both. There's no need to have one or the other.
Mm-hmm.
Jump into both and learn as much as possible, and then implement that knowledge by taking action, because that's how you really learn.
Yeah, because we were talking about paper trading.
Yeah, paper trading just wasn't for me. It was so fake. I just jumped in with a bit of money, 10,000, and it felt safe. And then once I saw the potential, then I put another 50, right. And then I had a good substantial amount.
For everyone's benefit, neither Rene or I were not licensed in financial markets.
Precisely. Yeah.
We don't know what we're talking about. You could lose all your money. Rene's got lucky this time.
I did take calculus 3 times. Did it help me with the stock options? Not one bit.
I know. I tell people all the time, I knew all this stuff in theory, in textbook, math and stuff. I knew Black-Scholes model, all that sort of stuff. I worked for a risk management company when I worked for IBM. That's what we did. We did risk management for large financial institutions. We sold $1 million software to all the largest multinational insurance companies and banks. But I didn't know how to make money with this.
I think it may be intentional. They don't really show people how to do it. And it's also a strategy, because there's stock options. There's so many ways of going about it. So many risky ways. And it's a question of minimizing risk. And same thing with real estate. There's so many ways of going about it. Once you believe in one strategy and wholeheartedly you jump in and it works once, works again and it works again, then we'll run with it. But it's the strategy, I feel, is the key. Having obviously support, other people doing it, other people talking about it, you learn from them. So a group of individuals that can have like-mindedness, that makes a big difference.
Yeah, we were talking about it because you mentioned how much benefit you got from coming up to hang out for dinner. What was that? Was that October? Was that October?
I think it was September.
September?
Was it?
Gee,
yeah.
I think it's early October, wasn't it?
Okay. So yeah. I'm used to going to Toronto at least 2-3 times a month. And
or was that in the spring? When do you think it was? When you came and had dinner with Katara and Chris?
I think it was at the end of September.
Okay.
Yeah, probably the 20th, maybe a month, like the 27th or so. I forget.
That was longer ago. Okay.
And just speaking with the others about it really opened me up, because I never got the opportunity. Back in January, I took the course. End of March, I got in, and then I spoke to a few people, but these were high-level individuals that were doing really well. And I got a few ideas with them and a few nuggets, you'd say. And then it really helped, and it propelled me even higher.
And that's always been one of the great things about the real estate community, is it's been so open, especially since none of you are in the same market.
Yeah,
right?
True.
And then even more with the stock options, because we're all specks of dust in the universe. We have no influence on each other in terms of competition.
Yeah. So it is interesting, because there's like this pandemic created 2 types of individuals, where there's those who harp on the negativity and those who see the potential and gain from it. And it's so much more interesting to speak to these people, because they're happier, they're doing stuff, they're making money, they're excited by it, and they're positive. And being around them makes a huge difference. So it just lifts the spirit up.
Right. And now just what came to my head when you're explaining that is, like the U.S. election, for example, like I care and I don't care who wins. Right?
Yeah.
Like I care, but I don't care that much. I more spent the time to figure out what industries would do well based on who won.
Yes, that was important.
Right. And same thing with real estate. I'm trying to determine what the influence on real estate would be, and then take action accordingly. And then some people would say, oh, you're awful for not caring about the election. Well, my plan is to make more money, and then I can support more charities.
Yeah, precisely. Yeah, that's right.
So I can actually influence more change with my money than I can worry about our election or reading stuff about people's policies.
Right on. It's what's the benefit of it? And often when I hear people talking about what's happening in the news, it's more opinions and complaining, and there's no slightest thought about doing something differently or making change. So it's not a good position to be in, roaming around complaints and opinions. You don't get very far.
Yeah, there's just so many more beneficial conversations.
Oh yeah, definitely. Yeah. So I find it very valuable to hang around with like-minded individuals, people who are smart you can learn from. Makes a huge difference. As I say, you're the average of the 5 people you hang around with. Huge difference.
Matt, who do you hang out with? Anyone else? You said Rene. You need to round it out with 4 more people.
Not a lot going on in Kingston.
No.
Yeah.
It's pretty quiet down. 124,000.
Is there other stock hackers from Kingston? There's gotta be.
Come to think of it, no. I mean, well, there's Brian. I just met him.
Yeah.
But he pulled his money out because he needed to buy a deal.
Yeah. That's okay. He's investing in real estate.
Yeah.
It's not a bad option.
Yeah.
Can you share some of the advice that you got? Some of the tips that you took out of that dinner that you had with Kristen Gutera?
Have one thing.
I think they were sharing the returns. So that probably expanded your.
Well,
your.
Once I left that meeting, I realized I had to put more money in. And so I put more money in. I also had to.
Wait, hang on. You were doing great before that point too. Do you remember?
Yeah. I was doing well. But the thing
do you remember how well you're doing? You were doing really well. Weren't you making like 30, 50% or something before that dinner?
Yeah, I was doing well. But it's relative to the amount that you started off with.
Right.
So I started off with 10 and then 50 and then added to that. But I also learned to have a higher goal. My goal was 4,000 a month and I reached it. And then once I realized other people had bigger goals, I was the only one limiting myself. I was like, well, let me just reach for 10. And that's my goal. And this November, I just crushed it. I mean, obviously, luck plays a part of it, but I've been on it more than usual. I keep on doing my work. I'm on the phone, but I've got my phone on my side. It's like a new addiction.
Right. Well, it's nice that you have someone to drive you, so you're free. That's great. You can make money while you're being chauffeured around.
I had to do a trade, before getting here, just to get my kick. Just to.
I know. Yesterday was bad.
Okay. Yeah.
Yesterday was Thanksgiving, so the market was closed.
Yeah. So I'm glad this is at 1 because the market's now closed. I can I relief.
Yeah. I was in meetings all day yesterday, and I knew that I couldn't trade, so my anxiety was better. It wasn't like, okay, meeting's over.
Yeah,
check my account.
So I've got a buddy who took the course, but he didn't put money in, and I said, listen, you gotta be careful with this because this is a game changer. You gotta balance yourself and have at least a foundation because he can put a lot of money. I know he can put a lot of money in. Put a lot of money in, you can easily get 50% easily.
Let's not make promises here.
I know. Yeah. All right. Let's.
You did. Doesn't mean everybody can.
But it can really topple things out because it's changed the whole course now. Am I going to be buying as many properties? No. I'm gonna probably liquidate a couple and change settings.
What's on the top of the chopping block in terms of properties?
What do you mean?
Which one would you sell first?
Oh, so I've got one that we bought last year, 160 downtown Kingston. Tenant doesn't want to leave. It's been a year, at this point.
Oh, so you can't turn it over?
Well, at this point, I'll just put it back on the market and sell it for, I don't know, more than I bought it for. Yeah. There's that, and there's another one. There's a couple that I've had for a while, maybe 10 years. So I may sell that one as well.
Student rental?
No, student rentals. I mean, maybe. Yeah, I'm thinking student rental because student rentals, as much as they're great, they are time consuming, and we feel as a team. Well, we had a property manager do our leasing and all that, but it just didn't seem to work. So we brought it back home. We're constantly filling these places up. Constantly. It doesn't end because they're staying 8 months, maybe 4 sometimes. So it's a constant management, which is great if you're starting off. But down the road, and you have other options such as stock options, it's less appealing. Doesn't make any sense anymore. So it's a progression.
Are any of your duplexes rented by students?
I did in the past, but now that most students are gone, the students that have come back are engineer students, physiotherapy, medical students, a couple master students. They're there. And what we did also to compensate for the lack of students, we allowed certain transient students to come out. So those who had just graduated, they weren't too sure where they were going. They knew the student lifestyle. So we rented a room to them. And at particularly one place, we rented by the room because it wasn't going to get rented either way.
Here's a funny one. Here's a funny question.
Yeah.
Because I know we all talk about it because we all laugh about it.
Yeah.
How many people we've told about stock options? They all think we're nuts. It's too risky.
Yeah.
How many people have you told, and how many people have taken you up on it?
A few good friends who are positive. They believed in it, but most often it's what's the catch, or they're like, how much do you need, or
that's fine.
Yeah, they don't really believe it. Granted, it's hard to believe. Like this month, it's special. I mean, this month alone was 50% for my portfolio. Like I'm looking at the numbers, going, I never imagined this.
Yeah.
So I can see the disbelief. But thinking back to taking action and believing, or how does one take action? It stems from belief. It stems from thoughts. If one can believe it. I remember when I started off with student rentals, or even before as a contractor, someone said, I'm going to live off student rentals. They're like, yeah, they didn't believe it. But I was like, no, I believe it. I know this is possible. The fact that I believed it was more likely that I was going to achieve it. But if I didn't believe it, well, then that's it. The road's done. I'm never going to actually achieve it. So belief and the thought of it, and believing in what you're telling yourself, makes a huge difference. So if people don't want to believe it, well, that's it. They're never going to learn. You got to be open to it.
And you took Stock Hacker Academy 2.0?
I did, yeah, with Lee. Yeah, it was good. Yeah, I read his book inside and out. I mean, once the pandemic came around, it was just like everything shut down. All of a sudden, you're not going out. I don't have cable. I don't have TV. So all of a sudden, I read the book inside and out, and it was fabulous. Yeah, it was really, really well worth it.
You did Roku then, right? You even know what that is?
No,
it's totally cool.
No. I looked into it, but I don't think I maybe did one trade. But that's about it. Yeah. No, what's helped immensely was Tesla.
Okay.
Tesla. And
again, folks, this is not advice.
Yeah, this is not advice.
This is far from advice.
The Tesla trades that I've been doing it's going to pay for my Tesla.
You're getting a Tesla?
Yeah, a Cybertruck. yeah.
How much is a Cybertruck?
It varies. So there's three types. There's 3 ranges of it. I think it's like starts at 49, 59, 69, I think. Yeah.
Which one are you getting?
I think the mid-range, but I think I may change my option now. now that stock options are coming around. Yeah.
Are you doing the tax deduction then?
What do you mean?
You talked to your accountant that you're buying an electric vehicle?
Oh, no, I haven't bought it. Yeah, I mean, it's in 2 years.
Right.
Yeah.
Trudeau's still in office for 2 more years. Yeah. You may want to talk to your accountant about that. You know, you can deduct a lot of that off your business.
Oh, really?
Oh, you haven't talked. Okay.
Yeah.
Sure,
I have lunch with my accountant at least once a month.
Terry wrote a blog post about it. Maybe we'll look for it.
I'll look into that.
Maybe just search Tesla deduction on our podcast. She wrote about it. I can't talk about it here because I've been asked not to ever talk about accounting.
You've been asked. Good.
It's funny because lots of people tell me to stop talking about stock options. But like, what was the split of our conversation between stock options and real estate?
It was all stock options, but it's also something that's new and it's a natural progression.
Yeah.
I mean, real estate's great, but it's more hands-on. There's other issues with it. This is so much liquidity and it's all pure. There's a lot of cash flow.
It is. I still say though, real estate's the best way to build wealth.
Definitely. I wouldn't overlook it. It's just it depends on where you're starting off, what you want to do, what you're capable of doing. What are your strengths or weaknesses?
Because even your 65-year-old aunt, she's investing in real estate passively. Right?
Yes.
Would you ever recommend that person buy a house?
Well, I wouldn't recommend her to do stock options.
No, but if someone had the capability, my question was like, would you ever recommend her go do a BRRRR?
No. You got to do a JV partner. Yeah, that's what the plan is to do it. And if that doesn't work, then it'll be her RSPs. Yeah.
Matt, what's your first investment going to be? Say $100,000 landed in your lap. What's your first investment?
Duplex.
Not saying duplex.
Yeah.
I don't think you can really go wrong.
Duplex conversions are great.
Yeah. Maybe just hold back $10,000 because what do you think you can cash flow on $10,000? stock hacking?
I'd say 400 a month. I mean, it's hard to, you're limited. Right now, I'm not even looking at stocks below 100. When I started off, I figured, okay, over 50, it's risky. And I had to change my game plan. And now, I mean, I looked at Tesla back in the spring. I was like, that's way too expensive. But I see the volatility, the premiums, and it works. And I see what other people are doing. And the premiums are juicy.
I'll have to show you both spreads after then.
Yeah, I haven't gotten to spreads.
Because how do you think Joel's making his returns on 10,000?
Yes, that makes sense.
Right. Again, this is historical fact, folks. This is not advice.
You have to, because he's limited by the funds.
Yeah. Because he's traded Nvidia. He traded, I think he traded Alibaba. So those are all expensive stocks, right? Sure, he's traded Tesla, again, expensive stock. But yeah, young Matt's not going to touch any of those with the $10,000 bankroll unless he does spreads. So folks, this is a bit more advanced. But yeah, okay, cool. So, hey, actually, I meant to ask, how did your market fare back in like February, March? How did Kingston real estate fare?
Oh, it doubled. Not doubled, but it skyrocketed.
Right.
There was a bit of a low point in March. There was a deal that I should have bought back in March when everything kind of shut down. I was like, you move on.
No, but actually, just a point though, because so many people say, I'm waiting for the crash. I'll buy in the crash. And you're a pro. And you couldn't even buy in the crash.
Well, I got a bit, I think what happened is doubt came in. It crept in a bit. And I'm like, okay, this is worse than I thought that we'd be over with this. And all of a sudden it wasn't. And it was doubt. Doubt plays bad tricks on you. So I doubted myself, and it was one of those properties like, this is a lot of money, because it was up to the studs, basically. It was vacant, or you couldn't live in it yet.
Private, so yeah.
Private money was there, actually. No, I backed out. Private money was like, yeah, we're into it. Perfect. And
in March, they weren't scared of.
No.
Wow.
This is my private guy. He's
this is your regular private guy.
Yeah. He's got a fair amount, and he believes in real estate, and also the price was $280 downtown Kingston, and around the neighborhood was $400. So he saw the value of it, and so he was into it. But I had a bit of doubt. I don't know, for some, and I mean, you move on. You bought other places, but doubt can creep in someone's mind. If it does, fear. Once you got doubt, you got the fear, and then fear of taking any action is worse, because what you want to do is at least take action, learn from it. You're better off than not taking action at all.
You remind me of the Mike Tyson quote: "Everyone has a plan until you get hit in the face."
I love that one.
With the Mike Tyson punch, then you stop thinking. But that's kind of like what happened.
Yeah,
like you had a deal. COVID hits you in the face. I want this deal.
No. Yeah.
But my point is, like all these people have a plan. All these armchair real estate investors. I'm gonna buy the dip. Wait until things fall apart, and I'm gonna buy.
They'll wait a very long time, because the thing is, even though it may be rising, the real estate market, it's so intrinsic. One house on one street. It was a beautiful neighborhood. This one house on this one street. You couldn't tell when you walked in, it was a dive. And so you got it low. I mean, if you can simply focus on getting a property that needs work, or the worst property on the street, then you'll be fine. But if you want to buy something like retail where everything's done, I ask people, when they're buying real estate, are you adding value? Where are you adding value? If you're not adding value to it, then don't buy.
On the other side, though, we were talking before we were recording.
Yeah,
I considered buying a condo because the value just got hammered.
Yeah. So so you're more of a savvy investor, but if you're a novice investor, you got to think of how you're adding value. And I see a lot of developers who give the perception of value. They give them the deal, and then at the end, it's not really much of a deal because they've overinflated the cost already. You need to add value through your own means.
And how important it is, because I think with the Warren, like the novice investor, the two of them that are listening, how important is it to know your market? Because you only mentioned Kingston. Do you invest anywhere else?
No.
Right. And how long you lived there?
I've been in Kingston for 25 years.
Yeah. So you know it all right?
I know quite inside and out. Yeah,
right.
Quite well. Yeah.
Right.
Yeah, you need to know your market. That's key.
Right.
And people from Toronto won't know the market, or other places. And the team's in place there. It makes a huge difference. I've been tempted to go elsewhere, but the distance it's not as appealing.
Mm-hmm.
And there's still deals in Kingston, so why leave?
Oh yeah, you don't even go to Belleville, eh?
No, I was tempted a couple times.
Yeah.
Also, the tenant profile is different.
Better, worse, rougher?
Worse. I'd say worse.
Oh.
Yeah. And since we do take care of our tenants in-house, we don't throw out the management to somebody else. We like to deal with good people.
Mm-hmm. It's the same for me. I don't like to go too far from my key areas. I know my areas. And even more important than knowing my area is who you know.
Mm-hmm.
So like my property managers. If you don't have a good property manager, you're done. You're in so much trouble.
Oh, yeah.
Especially if you're an out-of-town investor.
Yeah. I mean, property managers, you get a great property manager, they're golden.
Yeah.
But often property managers have a different perspective of things. If the place is vacant, it's not costing them a penny. It's costing you a penny. And it adds up. So...
My Hamilton PM doesn't get paid when it's vacant.
Oh, really?
Yeah, no PM fee if it's
vacant.
Yeah.
Okay.
Which is fine because our market's on fire for rentals.
Good.
So he charges a bit more per month, but again, doesn't get paid when it's empty. Yeah. So
no, I wasn't paying him. I wasn't paying him when it was empty, but it wasn't costing him anything.
Right.
It was costing me. So the pain was with me. He wasn't renting them for like 3-4 months, and I was like, "What's going on?" So we had to take over.
Right. Awesome. All right. We gotta talk about Matt. Like, I remember last time you were on, you talked a lot about government subsidies around students. Do you still do those things?
What do you mean government subsidies?
You've had summer interns. You've had people, all sorts of people that you're hiring to do work for you, especially on your videos.
Yes, that's right. That's right. Good memory. Yeah. So I much prefer. I like the students because they're open-minded. They're creative. They're more interesting. They're not constricted by structure from the past, so they're brand new. And there's always subsidies the government provides to hire students. Now, granted, there's a student. You may not have the same capacity, but there's a fair amount of people that come and call me wanting to learn what I do. And I've spent numerous years trying to convince others of my way of living and investing. And so when someone comes to me, I'm like, yeah, sure. If you're thirsty and hungry, I'll give. And it's a question of simply having a good arrangement. I mean, it's not always a question of exchanging money. It could be time and energy of some sort. So it's finding a mutual compromise, a win-win situation.
Matt's pretty lucky. I have 0 interns. I think Sherry's getting 3. Those people will be lucky.
Well, I think from what you're telling me, you're an introvert.
Not just that, I'm just busy.
Yeah. I'm an extrovert. I never work alone. So I like having other people around and bouncing a few ideas. And hopefully they can learn from it and get some stuff done.
I actually had someone ask, they messaged me saying, I'd love for you to mentor me in investing, charity, and something around golf. And my response was, I really appreciate the offer.
Yeah.
I'm flattered, but I'm spending all my time on investing, on my charity, and improving my golf game. So let alone have interns. So are you receiving subsidies now? Are you?
No.
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 Oh, okay. You're just paying Matt out of your pocket?
I've always had employees, but no, Matt, I don't pay him at all.
Awesome.
Yeah.
Awesome. Can we lend the mic to Matt?
Sure.
This was not planned at all, folks. Don't worry, Matt. No one listens to this.
That's all right.
All right. Get a little closer. It's okay. Just pretend COVID doesn't exist. We're not in the red zone. We're in the yellow zone. So are you in school still?
No. I graduated 2018 from welding and fabricating technician course.
Are you still doing that stuff? Are you doing that what are you doing now?
So right now I'm working at Lowe's, just mill
Good
work.
Stock.
And so I applied there because I wanted to learn more about like all the aspects of building a house, right? So yeah, and then just from there I've been just working on my own kind of side hustles, and that's when I reached out to Rene because I found myself listening to so many podcasts about real estate. I was like, I need to do something with this now. Like, I just need to jump in and actually put it to work. So that's why I kind of reached out to Rene and I just want to learn more about real estate, because you can only learn so much from a book and podcast. You actually have to dive in.
Mm-hmm. So what's he taught you? Or what's next?
Well, right now it's all about the social media, because I've been handling with social media. So I had some previous knowledge in social media and, you know, getting engagement and all that kind of stuff and putting your name out there. Because especially when it comes to like Rene's, your business model, when it comes to getting private money, you need to get your name out there. You need to get in people's heads, and when they think of real estate, they need to think of Rene, right? So it's all about getting the name out there and making people see it, right?
So is that your first step then? Is to build? Are you going to work on your own profile, work on your own branding?
So my philosophy right now is if I can help him and help him grow his business, then I can grow mine, right? I have to spend less time making mistakes in my own business, right? Then I can just go right in. I've already learned everything.
Awesome.
So,
are you reading the tenants? Are you reading Rene's tenants and stuff? It's probably next week. I'll see for next week. All right. Thank you, Matt.
Yeah.
You should make him do showings, because it's rental time. It's coming up for student rental turnover.
Yeah. There's a few showings. Yeah.
Yeah.
We haven't gone to that realm right now. It's more the social media, the marketing. I think in any business, marketing is key.
Oh yeah. I think people forget that part.
Yeah. And there's 2 renovations going on now. We're doing another building in January. So there's opportunities here and there.
Yeah.
And then you can see all aspects of it. I think, and he's also learning a bit more about stock options as well. So cool. I think a lot of success involves simply the mindset, the perspective of things. So I'm giving him my knowledge, my experience, whatever he has questions on, I'm open.
You guys going straight home tonight, or?
We're probably going to go see Cody. He's on the way. He's on the way back. And,
as I was thinking, you should probably drop by Ryan Carr on the way back.
Yeah. There's things. There's so little time. So little time, and I just know that I spoke to Cody. What was it, a month ago? He says, "When you're in Toronto, lunch is on me." So I said, "Okay, no problem."
Yeah, because he's retired too.
Yeah. He's a great guy.
He's only a year older than you.
Yeah, great guy. So yeah, exactly. That's another reason why I wanted to meet Cody's, because I think Matt would benefit from it. If you can meet someone same age, basically, very similar, that could help.
And he built his YouTube subscribership really fast.
Unbelievable.
Yeah.
I saw him when he started off, and I remember
when he started off,
and it was impressive.
8 views.
And so I think that's right. I commented, and he reached out right to me, and I was like, okay. And I started talking with him, and it blossomed to this.
For anyone who doesn't know, we're talking about Cody Ye, who was on this podcast just a few months ago.
There's his hat right there.
Yeah, I have his hat on my desk. But he was on this podcast just a few months ago, within 3 months, and he just retired at 29 years old from his day job.
He's now 30 now. He just celebrated. Yeah.
Oh, I missed his birthday. Oh, no. I remember his birthday now. So yeah, he's 30, but he retired before he was 30, largely thanks to the cash flow from stock options.
Definitely. I think just being surrounded with people who are positive in that nature, that's amazing. Yeah, it's great.
I think how people get it wrong is they take advice from people who aren't successful in something. Oh, real estate sucks. I lost all this money. Well, don't go learn from that person. No. Go learn from the person that actually made money. So consistently for like 10 years. How long have you been investing in real estate?
Since 2005.
Yeah, so that's a good amount of time.
Yeah.
Go learn from that person, not the person who says, I lost money doing this condo in 1989.
Yeah, and I've done thousands of mistakes, but I've learned through those mistakes over and over, and I've gotten to where I am now. But yeah, it's been a fun ride. But a lot of people are just fearful of failure. But the other side of failure is success. You need to fail a couple times and accept it, and then move on. I've been an entrepreneur since the age of 21. I have not had any other job.
Oh, Rene, we're running out of time, so 2 more questions.
Sure.
What do you want to share with the listener? Just anything you want to share.
I would say what I've noticed recently, in the past 5 years, is the importance of thought in words. Now, it seems a bit strange, but what you tell yourself, what I tell myself, what others tell themselves on a regular basis becomes the reality. And it's so seems so obvious now, but I only delved into it recently, where your words become your reality. Your thoughts become your reality. Words become flesh. What you think or what you think you can't do, regardless, you're right, just like Henry Ford said. So your words and what you believe in, what you tell yourself on a regular basis, makes a huge difference. So I'm a firm believer of being aware of what you're telling yourself, but also creating the life that you want in a present tense. So rather than saying, I want this, I want that, saying, I desire this, or I am that already. That makes a huge difference. I like to mention the story about, the Arnold Schwarzenegger. He was just a bodybuilder. And then he said, I'm going to be an actor. And they're like, what are you talking about?
Can you speak English?
Yeah, he can't speak
That's fine. Just dubbed it.
And then became the number one actor. So he's the exact same way. He just believed it, kind of faking it before you make it in a way where you trick the mind, because the mind does not distinguish between what is real and what is imaginary. So there's a great superpower in feeding your mind those beautiful thoughts that will encourage you, propel you to reach the lifestyle and the goals that you want.
And so do you practice like daily affirmations?
Big time. Oh yeah. It's been a key. It's been a game changer for sure. Yeah. Gratitude, exercise, good eating, journaling also helps, intent, all those things. I feel it's beneficial. And if it's beneficial, I do it.
It's funny. Several of our past guests, their key advice is more emotional quotient than intellectual quotient.
Oh yeah, definitely. Yeah. I don't think people need to know more. There's tons of people need to have more certainty in their thoughts. If they, without a doubt, know that this house they're buying is sure there's going to work out, then it's going to work out. But it's the doubt that I hear in people's voices. They've already shot themselves in the foot.
Right. Because if you're going to have doubt, then start coming up with solutions to it.
Yes.
Right.
Yes.
Like, this window's not big enough. Well, let's come up with some ideas how to make this window big enough. I can't get financing on it. Well, where can we get financing?
Doubt has swallowed up tons of people's dreams. And why? It's just doubt. You got to just pursue.
Awesome. Okay. And then for anyone who wants to follow you, where can they reach out? Are you taking on more interns? Because I'm afraid it's probably going to be a question you get. Mentoring?
Yeah, I do mentor a few people, coaching, consultant. I tend to enjoy that. As a teacher, it's kind of, I think the teacher within me is coming back out. So I've always enjoyed that. And it's much more satisfying than making 10,000 in stock options. It's just, there's something about seeing someone grow and learn. So I'm open to that.
Awesome. And then where can they follow up with you?
Oh, Rene Masse. Google my name. Everything comes up. My YouTube channel. I've got Facebook. So,
okay. What's the name of your business?
Alter Property Investments.
Okay. Awesome. And then, I don't know. I get pretty excited about stock options. But actually, what gets me really excited is to see the level of success. Like, I was reading our Google reviews the other day. I was like speechless.
It's amazing. It's a game changer. It's really changed the course of what I'm going to be doing in the next year or two. Definitely.
Well, keep us posted. Hopefully we see you again.
Oh, definitely.
Do you think you're leaving Kingston? Or at least for months of the year?
It's really I've got family there. I've got I've got my little daughter there. So that's what really keeps me in Kingston. Besides that, there's really nothing. I mean, friends, but no, I can see myself. I got a buddy who's a world traveler. I can see myself traveling a lot.
Where's the first place you're going?
Well, I'm thinking about skiing because December is my next is next month. Whistler. I'd like to go back to Whistler, but I'd say south of France, Italy, Greece, Barcelona.
Some pictures when you do trades there.
Sounds good. Most definitely. And I've already looked at it. 6 hours difference.
It's funny how life has changed, how we work ourselves around the market hours. Rene, again, thanks for doing this. Thanks for making the trip out.
Thank you.
Before you go, if you're interested in learning more about an alternative means of cash flowing like hundreds of other real estate investors have already, then sign up for my newsletter and you'll learn of the next free demonstration webinar I'll be delivering on the subject of stock hacking.
It's a much improved demonstration over the one that I gave to my cousin Chubby at Thanksgiving dinner in 2019. He now averages 1% cash flow per week, and he's a musician by trade. As a real estate investor myself, I got into real estate for the cash flow, but with the rising costs to operate a rental business, it's just not the same as it was 5 to 10 years ago when I started. Never forget that cash flow reduces your risk. The more you have, the more lumps you can absorb. And if you have none or limited cash flow, you're going to be paying out of your pocket, like I did on a recent basement flood at my student rental in St. Catharines, Ontario. If you're interested in learning more, register for free for my newsletter at www.truthaboutrealestateinvesting.ca. Enter your name and email address on the right side. We'll include in the newsletter when we announce our next free stock hacker demonstration. Find out for yourself what so many real estate investors are doing to diversify and increase their cash flow. And if you can't tell, I love teaching and sharing this stuff.